Coinbase. All right, time to get serious. Okay, here we go. Coinbase is sitting at $175.85, down 2.88% today. On the past 5 days, it's up 5.8%. Past month, it's down 16.59%. On the past 6 months, it's down 43.09%. Year to date, it's down 22.24%. On a 1-year chart, Coinbase is down 15.61%. On a 5-year chart, it's down 48.58%. Maximum chart goes back to April 16th, 2021, and it is down 48.58% since then. Jeez. Coinbase, Struggle City. All right. Okay, here we go. They got a PE ratio of 40.07, a 52-week high of $444.65, a 52-week low of $139.36, an EPS of $4.39, with 223.04 million shares outstanding and 5,000 employees. What is that noise? It sounds like a freaking helicopter or something. Alien spacecraft is coming through my house. All right. Coinbase declined recently due to a... here we go, guys. Sorry. Perspectives from across the web. Coinbase declined recently due to a crypto market correction and Q4 2025's earnings miss. Catalysts include the Everything Exchange pivot and falling retail trading volumes. Analysts project a cautious Q1 2026 as the company transitions toward diversified fintech revenue despite ongoing digital asset volatility. Ugh, brutal. What did they think was going to happen? Bullish view. Expansion into Everything Exchange. Yeah, you and everybody else. I don't know. This is kind of become kind of a weird thing. All these stocks are starting to have this, like, I mean, they're not stocks, companies, I mean. Like, you've got, like, Kalshi, Robinhood, Coinbase. You can just trade every single thing on these things. It's like, I don't know if that makes you more valuable, necessarily. I don't know. Seems kind of weird. It's just my opinion. Back to the... Clear my throat. Okay. Back to the bullish view. Coinbase has launched a new service allowing users to trade thousands of U.S. stocks and ETFs alongside cryptocurrencies with zero commission. This strategic pivot aims to reduce reliance on volatile crypto trading fees by integrating traditional assets through partnerships with platforms like Yahoo Finance. Strong subscription and services growth. Subscription and services revenue, including stablecoin interest and staking, now accounts for approximately 40% of total revenue for Q1 2026. The company forecasts this segment to reach between $550 million and $630 million, providing a more stable income stream compared to transaction-based models. Institutional adoption and infrastructure. Institutional adoption remains a core driver, with major players like Fidelity and Goldman Sachs expanding into crypto. Analysts highlight Coinbase's strategic dominance and custody and its base network as foundational infrastructure that positions it as a unique hybrid between a tech giant and a systemic financial institution. Bearish view. Weak Q4 2025 financial performance. The company reported a significant Q4 2025 earnings miss with an EPS of 0.66, falling over 30% below analyst estimates. Quarterly losses reached approximately $667 million, largely driven by unrealized crypto investment losses and a 36.8% year-over-year decline in total transaction revenues. Crypto market volatility and momentum. The broader crypto market has lost roughly $2 trillion in value since late 2025, with Bitcoin falling over 45% from its peak. This correction has severely impacted retail trading interest and prompted several analysts to slash 2026 price targets due to declining trading volumes and market capitalization. Intensifying competition and fee pressure. Analysts at JP Morgan and other firms have flagged growing competition from smaller fragmented crypto players and traditional brokers. This saturation threatens Coinbase's market share and pressures margins as the industry shifts from high margin retail fees to lower margin institutional custody services. So there you have that. There you have that. Check the earnings. On February 12th, 2026, they missed on EPS. They were, Lord, they were predicted to get 0.94. They got negative $2.49. A 364.89% miss. They missed on revenue. They were predicted to get $183 billion. They got $171 billion. Had a weird Asian accent there for just a split moment. A 6.41% miss. You could listen to the call right here. It's about 44 minutes long, if you want to. Wow. Brutal. I don't own Coinbase. Full disclosure, I do not own Coinbase, and I probably will not be. No. Coinbase exec says crypto corrections are simple math, not a catastrophe. Before we get into this, that would be kind of my thinking, is that Bitcoin goes on this long pattern cycle, and like, if you didn't predict that it would go this low and you're like panicking as the like guy of Coinbase, like, bro, what? Like, you didn't research it hard enough. They must have been expecting all this. There's no way that they weren't. If they weren't, then like, bro, what are you like? Like, I'm a dummy in the back room, you know what I mean? The fuck? But they did. Surely they did. You know what I mean? Of course they did. Stupider things have happened. Even in crypto, what goes up must come down. You really just mathematically can't have that explosive upside forever. Coinbase head of institutional strategy, John DiAgostino, told Yahoo Finance's opening bid disclosure Yahoo Finance has a partnership with Yahoo Finance has a partnership with Coinbase. So we got a bullish article here, I guess. He noted that if Bitcoin's growth continued indefinitely at its historical compounding rates, the asset would eventually become larger than the global economy. Bitcoin has seen its price fall over 25% year to date. The digital asset's value now is far below its $125,000 high reached in October of 2025. But these periods of mean reversion, or so-called corrections, are a very natural part of a scarce asset's life cycle, D'Agostino argued. While the narrative of mean reversion implies a long-term cushion, the short-term reality remains bleak. D'Agostino acknowledged that the logic is not comforting to anyone who came in at the top, but he urged nervous investors to look past the price tickers and toward the underlying infrastructure. Bitcoin sitting at $65,581.59. The institutional shift has continued. D'Agostino noted that traditional finance giants like MasterCard and Visa are now using USDC to accelerate payment settlements and introducing the concept of settlement finality. He compared the current financial system to waiting days for an Amazon package to arrive during a snowstorm. In his view, society is no longer willing to tolerate the delays and wants to move toward instant, secure transactions. Once we have the chance to have things done much, much faster, securely, safely, with finality, we will choose to do it that way, D'Agostino said. Despite the institutional optimism, a healthy dose of skepticism remains the safest bet for retail traders. While the infrastructure is undeniably improving and the math of a correction makes sense on paper, the volatility of the scarce asset leaves individual investors exposed to massive swings. Likening crypto to the tech industry, D'Agostino admitted the digital asset ecosystem now needs a catalyst to get out of its sideways trading. The most potent catalyst may be legislative. D'Agostino compared the potential impact of the Clarity Act to the Commodity Futures Modernization Act, which transformed global commodity markets decades ago by establishing a formal market structure. Fuck. Okay. Formal market structure to govern how banks and ecosystem participants behave. The act would provide the legal guardrails for the industry to move beyond its negotiation price. For now, D'Agostino is optimistic a deal will be reached, noting that even an imperfect bill would trigger a massive shift in adoption, one that would, in turn, give the SEC and CFTC a better purview. We want consumers to have the benefit of this technology, he said. I think we're going to get there. All right, guys, what do you guys think about Coinbase? It's not for me. I'd probably rather just buy Bitcoin, but you know, some people might like Coinbase. Maybe you like Coinbase. Leave a comment. Leave a comment if you like Coinbase or if you hate them. Like and subscribe, guys.